Well, we now have the data for the Toronto real estate market for the month of October, and I'm happy to report that what that data indicates is that the market is where it should be before the sort of frenzied run-up that we had at the tail end of last year, leading up to the provincial government's announcement of the Ontario legislation to try and curb price growth and that kind of frenzy that we experienced up until October the 20th. The data indicates that we are essentially where we would have been had that not happened. And in particular, the data indicates that we are more or less where we were last October. Some of the statistics that come out indicate that sales were up to about 7,000 plus, which is very good for the month of October. We see new listings up, which gives more choice to the buyers. But we know that buyers are still acting very quickly and buying those properties that are in good locations, that are well priced, that are in good condition, because the average days on market came in at only 23 days. You could probably go to almost any jurisdiction anywhere in the world and discover that pace, this is but a fast pace for sales that take place anywhere in any marketplace. The market is still strong from a price perspective. In the city of Toronto, to buy a detached property in the month of October, you'd have to pay almost $1,300,000. To buy a semi-detached property, you'd have to pay almost $1 million, and even a condominium apartment came in at almost $560,000. So prices are still extremely strong. Compared to last year, they're almost 3% higher than they were last year. And that is a pace that we would like to see continue for the remainder of this year and into next year. Price gains that are consistent with effectively the cost of living increases, with wage increases, so that they don't get so heady that they outprice themselves and then become unsustainable. So it's safe to say that there is not a correction, but that the market has kind of come to its senses in that frenzy that I spoke about a moment ago that ended at the end of April is something in the past not dissimilar than the tulip crisis and the tulip bubble that was experienced centuries ago when people paid inordinate amounts of money for tulip bulbs. The market before April the 20th was a little bit like the tulip bulb bubble. But fortunately, we didn't crash. Fortunately, there was no bursting of the bubble. And I think we're now in a place from a market perspective where there's some balance to the market, a balance that reflects our economic conditions, a balance that reflects the increase in mortgage interest rates, and a balance that will reflect ultimately the new stress testing that will happen with respect to mortgage interest rates and the borrower's ability to pay mortgages, particularly on renewal. All of that balance means that we will continue to see price increases, but moderate price increases as we go forward. And as I mentioned earlier, price increases consistent with what's happening in terms of the consumer price index and the rise in wages. What we will continue to see is continued pressure on the rental market, because the provincial government's decision to implement universal rent controls in a already restricted rental market is going to have an even further restricting effect. It's going to cause rental rates to go up higher than what they otherwise would, particularly when properties become available for rent at the end of their lease term. And ultimately, it's going to cause the vacancy rate to go extremely low, in fact, critically low. Vacancy rate is currently about 1%, and it will go even lower. And with the most recent federal announcement that by the year 2020, that the Canada will welcome 340,000 immigrants, we will see even further pressure on the rental market and the housing market generally within the GTA, as many of those immigrants make their way into that region. So looking forward, the market is in a very good position right now. I think it's in a good position for buyers. They have some choice. The active listings compared to last year are up by almost 78%. So buyers have choice. Prices are now stabilized, and that market is a market that we all welcome and we all look forward to experiencing as we move through the remainder of this year into 2018.